Today on Holdco Builders, I'm joined by Reggie Pryor Jr., a value-driven investor, business buyer, and turnaround specialist, founder of Pryor LLC, a private holding company with more than 36 subsidiaries across chemicals, finance, technology, and real estate. Very excited for having you on the podcast today, Reggie. Thanks a lot for doing this, and thanks a lot for the effort with location selection. It's very different.
Yeah, sure. Absolutely.
Okay, so your playbook is pretty simple. You buy what others overlook and then rebuild it into a durable cash flow machine. I guess it all started from somewhere. So let's start with your background and everything before your first acquisition.
Yeah, sure. So I was very fortunate when I was a college student at Wofford College, which is upstate South Carolina. There was a guy on our board of trustees. His name was Jimmy Gibbs. And I knew Jimmy through a mutual friend. I was introduced to Jimmy. Jimmy took me under his wing and was my first official business mentor. And when we did this, it was a very, fascinating time for me, because when I went into college, I actually thought I wanted to be a lawyer and went through all the different legal situations with, Judge Garrison Hill and District Circuit Court Judge down in Lawrence, and hated every minute of it. And I thought, I really need to get into something that I enjoy every day. When I had the opportunity to get with Jimmy Gibbs, I jumped at it. So Jimmy, if for your viewers that doesn't know, Jimmy is a very, very successful businessman in Spartanburg, South Carolina, which is where we're from. And where he did good at was the South is primarily the textile industry capital of the world. This is where all the textiles came from the 50s, 60s, 70s. Well, around the 90s, maybe even the late 80s to 90s, textiles started going overseas due to certain situations, NAFTA, laws, a lot of our legal situation caused them to leave because couldn't compete with labor. So what would happen is all the mills around North and South in Carolina and Georgia, Florida, would close down, and Jimmy would actually go in and buy these mills out, the entire mill. And when he did that, he would, in a very orderly way, close the mills down. He would take the machinery, different types of looms and dyeing machines, and he would ship it overseas to, Pakistan, China, and he made an absolute fortune. And then the real estate that was left over, he would, repurpose that for, different things such as, community centers or, whatever, apartment buildings for students. So that was really my first time being engaged with a business person of that magnitude, and was just very, very lucky to have had that kind of insight at a young age. I was 21, 22 when that happened. I remember, he would, me and him would get on his Learjet and fly, all over the place, looking at these huge textile mills that he would go in and buy. And I didn't realize it at the time, but what he was essentially teaching me was what later in my life, that we'll talk about, I'm sure, was very, very meaningful to me. And it really changed the whole trajectory of my career, which of course is value investing, which is what Jimmy was doing. He had a different spin on it that I probably wouldn't have done, but nothing wrong with it, but it's just not what I would have probably have done. But the guy made a fortune. He's still a good friend of mine. Just a really, really good guy. Fantastic mentor.
Now, if you think back, these people like Jimmy, they value their time. There's lots of people who maybe want something from them. What do you think made you special that he decided you, if we can say that?
That's actually a really good question. So I remember about 2 months in, I went to him one day in his office and I said, why me? He said, well, I figured you were a pretty good kid, he said, and nobody's ever asked me for an internship before. You're the first. I said, really? And he said, you absolutely are. And I said, well, man, I'm glad I am. And that's a very, very valuable lesson that I try to tell a lot of these young kids when I talk to them in business schools or colleges or whatever. Always ask people for things. Always. Because you never know what they'll say. And that absolutely changed my life. So just a fantastic experience. Fantastic.
How long did you, if we can say, hang around with him, and then did you decide to make this jump yourself, or how was it all? Because you said you were 21, 22. So
I was
what's
21.
next?
Yep.
What's next?
So I graduated from college, and actually my dad started a company in Florida, and I went down to Florida for about 3 years. I ran the company for him, and it was, a lot of really long hours, but I enjoyed it and I learned a lot. And that's one thing about life and one thing about business is you continuously learn. It's a process. You can have a continual process, and you just learn so much being in the business world. But I did that for a little bit. And then I started doing something, I'm sure your viewers will be familiar with this. I started doing a lot of venture capital type deals where you'll put money into startup companies that are smaller, high risk, high reward. And I learned pretty early on that is not where I needed to be. So, it's a very, very hard to compete in that industry for sure. And so it was basically a huge VC stuff. And I started doing a lot of starting my own companies. I mean, when I was in college, absolutely, when I was with Jimmy Gibbs, one of my roommates in college, David Babb, he's actually a dentist now. We started a clothing company in Charleston together. And that was my first experience with having, our own business. And here's some more advice. Don't get in the rag business. You don't want to do that either. But it was a lot of trial and error, and it went well. I learned a lot of lessons. And as we get through that, I started doing more and more investing, not necessarily venture capital, but more financial type investing in like people's, financing houses for people. Then I got involved with, buying notes off of people, and it just kind of kept rolling, and it just kind of kept building. But then one day I picked up a book. I was watching, might have been CNBC or something. I saw they were talking about a book called The Intelligent Investor by Ben Graham. And of course, Ben Graham, was a professor at Columbia University. Warren Buffett actually had him as a professor, and it was David Dodd and Benjamin Graham that came out with the Security Analysis and then The Intelligent Investor. And I read both of them. And I think a weekend. That's how excited I was about it. And I remember reading that book, and it changed my life. And I've heard people say all the time, it's like an inoculation. Either you get it instantly or you never seem to get it. And it just instantly clicked with me, and it made so much sense. And I thought to myself, here I am running around trying to do these startup businesses. Why not look into this value investing thing? So that's how I got started.
And one more thing about these early days, you mentioned a few times that you started investing, financing houses, buying notes from people. Where did the initial capital came from? Did you save up from those projects from your work? And you said there were some businesses you started. I guess not all of them succeeded, if we can say so. So there are some expenses. So where were you financially when you were doing all those things?
I had some real estate that I owned. I believe it was about 95 acres. It was actually, this is really a cool story. My dad, when I graduated from Wofford College, he said, I'm proud of you. I'm going to give you something to get you going, because my dad never did this for me. And he actually gave me 95 acres of property where we're from. And so what I did is I went to a bank and I got a revolving credit facility against it, or I borrowed against it. That was my start. That's how I got going. So I had a huge advantage over, 99% of people. And that's just being blessed and having a wonderful dad, I guess. But I would take that money and then I would invest it, and then I'd make more money, and then I'd suck that money out and go do another deal. Then I would go do another deal, and then it just started compounding.
You read the book, Intelligent Investor. You learned about value investing. You had a bit of capital. What's next? Hi, quick break. If you're like Reggie, buying a small business, or you want back someone who is buying a small business, you need to know about today's sponsor, CapitalPad. It's a marketplace built for acquisition entrepreneurs. Operators list their live deals and investors can browse and fund them. And the CapitalPad handles the messy stuff, standardized terms, governance, distributions, all up front in black and white. In short, what they do is they professionalize investing in small businesses. Obviously, returns can be compelling and the experience is seamless. It's founded by Travis and Tonza, phenomenal entrepreneurs who are buying businesses as well. So they've been seeing both sides of acquisitions. So if you're raising capital to buy a business or you want exposure to acquisition deals, go to capitalpad.com and tell them that Mick, private equity guy from Holco Builders, sent you. That's capitalpad.com. And now back to the show.
So as I was reading these books, I thought to myself, this is just like what I learned with Jimmy Gibbs. I mean, it's essentially the same concept. And I said, well, what if I could have the same ideology as Jimmy had, and instead of breaking things apart, rebuild them? So I really spent several years studying the value investing process, the valuation techniques. I, got on the phone and spoke to everybody I knew to speak with in the investing community. Phil Fisher, which is a business guy that writes books. If you ever have an opportunity, please read his books. I've read every one of them. They're wonderful. But Phil Fisher, he had an approach called the scuttlebutt approach. And what that meant was he would go around and talk to everybody, analysts, companies, executives, competition, and he was starting to piece all these things together. And I did a whole lot of that when I was younger to kind of build a platform of not only knowledge, but of contacts. So I knew in the long run where I was wanting to go, but you have to build a platform before you can do that. And that's what I did in my younger years as I was doing some of these other investing type deals. But we were invested in, several different things and still are.
Still very young. You're not 40 yet, right? You're 39?
38.
38. Okay. So you built this portfolio of companies. So maybe how is your thesis different from a typical private equity? Like how do you view your portfolio when comparing to private equity, for example?
So private equity, we're very similar to private equity. So we are a holding company that has basically 4 pillars, 4 legs, and those 4 legs are Pryor Diversified, Pryor Global, Pryor Commercial Real Estate, and then there's a Pryor Capital. And that's our 4 pillars. And then that branches off, and then, like you said, we had 36 of them. I'm sorry, what was the question again? I started rambling.
The difference between typical private equity, because you're not always selling those companies, you're holding them for a long term. So maybe to understand the advantages, disadvantages, and what has been and what is the thesis behind your thought process of building this?
So there is a good friend of mine. His name is Roger Ezel. Roger is probably one of the smartest financial gurus I've ever met in my life. I actually spoke to him probably 2 hours ago. And he taught me years ago, he said, when you buy something, it's not always smart to sell it. And I said, what are you talking about? He said, well, think about it. When you sell something, you have to pay capital gains tax, correct? I said, that's right. He said, but what if you go to a bank and borrow against your assets that you already own? Because you still have the opportunity for them to appreciate in value. You get a tax incentive. Why wouldn't you just do something like that? So that really I got to think about it. I was like, that's really a smart idea. So that kind of got me into the idea of, I don't like to sell anything just because of my personality. I don't really like to sell anything anyways. But now if somebody came to me with a crazy offer on something, then sure, I would talk to them about it. But in my mind, every time I invest in something or buy something out, I have absolutely zero interest in selling anything. But there's always a possibility for it. You never know. But Roger really instilled that into me because that taught me, that there's ways to retrieve money out of your assets you have and not to sell them and pay all these taxes.
Could you give us an overview of the of the current portfolio, which now you've been building this for the past, I guess, like 15 years, if I'm correct. You started 24, 25.
Yeah, I started, Pryor Diversified was the first business I started, and it was I graduated college in 2010, so it had been 2012, 2 years after college. Pryor Diversified was the first. We did a lot of stock market stuff at the time. What we did, so our current portfolio, we have, some of our holding companies have commercial real estate, which are very, very interesting. We have, because keep in mind, and I'm guessing we're going to talk about this a little bit, what value investing is. Every company that I own, every philosophy we have, they may be in different companies and they may be chemicals or real estate or retail or whatever, but they're all from the same exact point, and that's value oriented. We are all bought into being value investors. And like, even when you buy or sell a note to somebody, or buy, like I do a lot of things where I buy houses for people and I'll refinance it for them. If you buy a house and it's worth $300,000 and I can give, I can loan $200,000 against it, that's undervalued. That's a good deal. So we do a lot of that as well. So regardless of what all the portfolio is, they all have a touch of value traits to them, if that makes any kind of sense.
Would you explain some traditional businesses and the value investing model there, because there are some risk involved as well? So could you give maybe a few typical deals you've done, maybe in the structure wise? How do you set it up, and where do you actually see the best opportunity when something comes on your table?
Like I said before, I'm in Spartanburg. There was a commercial building. It was on, I believe it was 4.5 acres on Highway 9. Now, Highway 9, for your viewers, is like, we call it the new New York. The road, it's just, the traffic's ridiculous. And it's the growing, everybody's moving here. Where I live at the very top of South Carolina is one of the fastest growing, I think it was number 5 fastest growing areas in the United States. The people coming to upstate South Carolina is amazing from all over. From Michigan, Pennsylvania, California, they're just coming here from everywhere. And well, when you have a huge burst of people coming in all of a sudden, they need homes, they need housing. So the real estate around here has gone through the roof. The prices have. So when I got a phone call about this particular building in Bowling Springs, I knew it was prime real estate. Well, this is where the value investing comes into play. So when I went and looked at the building had, it was a company that owned the building. It was called, it was an insurance company. It was called Woodman of the World Insurance Company that owned this building. So the building it was a decent building, but nothing, it wasn't the Taj Mahal or anything. So I went over and looked at it, and I thought to myself, this building's got to be at least worth $1,800,000. So the way that it was structured with the buying, the people that owned this building, there was a board. And then once you got past that board, you had to go speak to another board and then another board. They all had to vote on who they wanted to get the building. So I kind of felt like a lobbyist for a little bit in Washington, but I ended up buying the property for $600,000, and I knew it was worth $1.8 million. Well, now this is what I love to do, and this is what I'm halfway decently good at. So when I bought the property, I came in, we completely renovated, fixed, painted, did all these things that you would normally do or traditionally do on a real estate play. Well, I noticed at the road, there was this skinny little piece. Now remember, I've got about 350 foot of road frontage, and that's, pretty significant. Well, there was an additional 125 foot that the state of South Carolina owned because they had just widened the road, call it 6 or 7 years before, and that piece the state kept. So I called a contact of mine I had in the county, and I said, what are you guys going to do with that land? And the lady told me, she said, well, Reggie, I don't know. I said, well, check into it for me because I'd like to buy it to add it to my property. And she said, okay, well, it took about a 6-month, program. I had to go through the South Carolina Department of Transportation. I ended up giving $1,200 for this piece of property that attached to my land. That alone added about $265,000 of value to the property. So that's what I mean by value. You see what I'm saying? You go in at a really, really good price. And then once you're in, you look around and you say, where's the value at? Where is it untapped? How can I make it? How can I fix it? How can I bring that value out to the surface? And that's what we do. And we do it across pretty much all areas.
It's fascinating. Could you maybe share more stories like this, what you've seen, what you've done, by not maybe mentioning names and things like that, if you don't want to?
So there was a deal about I'll tell you the company. So there was a deal about 8 years ago, and I'm sure if you're a follower of Bill Ackman, as I am, I'm sure you're familiar with Bill Ackman.
Yep.
Love Bill. I think Bill's a great guy. I was in my office one day and I watched him on CNBC, and he's already talking about two companies called Fannie Mae and Freddie Mac. They're, mortgage guarantors. So I went off on a tangent and I looked at both of these companies, not to buy the entire thing, but just, to buy stock in them, on the private markets or the public markets, excuse me. So I loaded up on the stock and I studied these businesses for years. I probably studied them. I could have probably taught a college class in it, and I knew I was probably right about the deal. And I figured that the stocks, I were buying them at around $2, $2.50. I figured they'd be worth about $47 a share, and I was buying them for $2. Well, there was another company that came up that I wanted to buy, so I actually cashed out of Fannie Mae, even though I had 100% confidence it was going to be great, and I bought this other company. Well, the reason I told you that story is because a good friend of mine, I told him about that deal back in the day. He called me 2 weeks ago and thanked me. His whole family called me and thanked me. The Fannie Mae investment paid off. They all paid their houses off. They all paid off all their student college debt, all their car debt. They had no debt anymore because of that investment. And he called and he said, Reggie, I just wanted to tell you how much we appreciated that. And that's the kind of things that makes doing this business worthwhile, is stories like that. That's what really excites me. But they don't always turn out that good, though. There's always some problems sometimes.
Hey, one more quick break to shout out to a team and building deal flow machines for different funds, holding companies, family offices. It's the business called Spacebar Studios, and they are done for you newsletter service for the companies I mentioned before. So if you want your newsletter to go from we should do this to this is driving deals, you should talk to Spacebar Studios. Brandon and David, the founders of this, great guys. Brandon was on the podcast as well. He builds a portfolio of such companies, and they will help you to map a strategy, spin up production, and handle all the boring but critical stuff. So every newsletter gets sent, and the reader list will grow on a week-to-week basis. So go to spacebarstudios.co and book a free call to them, talk to them. And currently they run an offer where they send few of those for free. So there's nothing to lose. Go to spacebarstudios.co and talk to their team and send them and tell them that the Holdco Builders sent you. Now back to the show. There have been some of those which really get you scratching your head, keeps you up at night, because things are always not going as planned. Maybe you can give some examples of those stories as well.
So we were looking at buying a large position in Sears. Sears, the retail store at the mall. They used to sell, Die-Hard batteries, Craftsman tools, the Sears brand. Well, Sears, there was an investor. His name was Bruce Berkowitz, and Bruce went in and bought a bunch of stock. And I noticed that. So I went in there and started looking at it. And if you do the valuation work, and I'll teach you guys how I do my valuation work in a minute. But if you look at the valuation metrics and the way that he calculated, the way he did it, and mine was very similar, it was worth about $250 a share. Might even been more than that. It was selling for $13 a share. So And the thesis was Sears had some of the best mall real estate in the United States. They also had brands they owned like Die Hard Battery. They owned Craftsman Tools, Lands' End Brands clothing. They had a bunch of cash. And then some of their debts were, long-term debt laddered, and it was all to where, even if you have a 99-year lease on a building, you can still consider that a building of yours, because you can sublease it or whatever you want to do. And the business looked really, really good. So I went in and bought a little bit of it, but then I didn't buy a whole bunch. But here was the miscalculation and where I would have lost my butt if I had gone through with it. So Eddie Lampert at ESL, he's another good hedge fund guy. He actually comes in and the way I understand it is he was loaning Sears money out of his hedge fund. When he would loan the money to him, he would want property as collateral. Well, as Sears kept burning through cash, he kept loaning and loaning and loaning, and he was getting a discount buying his collateralized real estate. So, and you couldn't stop the bleeding, and you didn't have enough power in that position. You couldn't have went in there and raided the business and took it over and done something about it. You couldn't have done it. So you had to sit back and watch this happen. And we kind of knew that was a possibility, but I'm just tickled I didn't get into Sears like I thought I should, because it was cheap. It was a great deal, and I'm not saying Eddie did anything wrong, but I just felt like they should have shut the doors down, closed everything up, liquidated the inventory, and then they should have just, either leased long-term or sold off the real estate for shareholders' benefit. And I didn't see that happen, and I didn't think that was right. But, that's been a couple of years ago. So
we've discussed real estate. We've discussed public market. Can we discuss some of the deals you've done in the private market when it comes to those traditional companies? For example, one you're sitting. Can you share the story? Or what I'm trying to get is where do most of those extremely good and rare deals come from? How do you find them?
So I've been very, very blessed to have, a lot of, connections in the medical community, connections in the government community, connections in the business community. We've got a really good network of individuals, investors, bankers, lawyers that I work with, every day. We already owned, for example, you're talking about Moretex behind us. So this is Moretex. Moretex was established in 1908, same year that Ford launched the Model T. It's a 117-year-old company, and I didn't know it at the time, but I also own another chemical company, and I had a customer come to me that has bought a lot of stuff from me, and they said, Reggie, can you help us find a chemical called polyethylene emulsion? And I said, well, sure, I can. And they said, well, what do you need from us? I said, I just need one thing from you. I need you to tell me what the hell polyethylene emulsion is. So I called another good friend of mine that was an executive in a company, and I said, look, I need to find a polyethylene emulsion. Where do you get these at? He said, Moretex Chemical in Spartanburg makes the best polyethylene emulsions there are. You can't get any better than these guys. They've been doing it forever. So I called them up out of the blue, didn't know anybody over there. Got in my car and drove over there. It was right at the Christmas time about 2 years ago. And I walked in the front door, and there's like an energy you get when you walk in somewhere. You don't hear phones ringing. You don't see people running around and getting orders together. It just looked almost like it just didn't have any energy. Let's just say that. So I met this wonderful lady, Trish. She actually still works here. She's absolutely fantastic. And Trish, I got to talking to Trish that day about the chemicals they offered and the polyethylene. And I said, oh, yeah. And Trish, by the way, would you ever consider selling Moretex? And she looked at me so weird. Well, I left. Well, about a couple of days went by, and they called me back, and they said, were you serious? Were you serious about buying Moretex? And I said, well, I'd absolutely look at it. And they said, okay. They said, well, so what I'm getting at is what I didn't understand at the time is the lady that had been running Moretex had died like 2 months before I walked in there. Did not know it. And the family was together trying to figure out what to do with this behemoth of a business. And they didn't really know what to do. So by me going in there and just saying, hey, would you guys be interested in this? It kind of got the conversation rolling. So at the time I started talking to them, it was owned by 5 women. It was all women-owned company. Like I said before, they had probably the best polyethylene emulsion in the United States. Great products, great infrastructure. It would cost you an absolute fortune to replicate building this place. And this is just one section here. There's 7 more sections in this building. So I got involved. I got my attorney involved, and we got to looking at it, and we sent them a letter saying how we were very interested in purchasing the place. We did not discuss price, but there's a secret here, and this goes into the value investing as well. So where this property is sitting in Spartanburg is in the city of Spartanburg downtown. One thing that really caught my eye pretty early on was directly next door to us. They have just built a $70 million minor league baseball stadium. State of the art. I mean, it is unbelievable. I've been to several games with some buddies. It's a really, really cool place. They've done a magnificent job building it. So I knew going in that I got a real estate play here. But at the same time, you also have a chemical plant on there. And I don't know if you've ever been in the chemical industry or know much about it. Let me take my word for it. The chemical industry is a very, very hard industry to get into. It's very capital intensive. It takes a lot to build these things, a lot of money. And so when I got with the family, they eventually called me in as the family to negotiate. We negotiated a deal. They were very, very good. They've been very helpful, very supportive. They've had our backs. They've told us, we're pulling for you, Reggie. We want to make this thing work too. And so I've been in here for the past 6 months, took over 6 months ago. This has been my number one project for the past 6 months. It has been one of the, and I don't want to say this in any kind of way for somebody to misconstrue it, but in my mind, this was probably the best investment in South Carolina this year. There will not be an investment like this in South Carolina. I'm telling you, this was the best deal I've ever seen or ever found. And you asked me how I found out about these things. I walked in there to see if I could buy chemicals from them. So these things happen all the time. It's happened to me several times. But do you want me to continue talking about Moretex, or do you want to? Because I can talk about it all day long as far as what we're doing and how we've done it and how we've fixed it.
Let's talk a little bit about this, and then let's go and talk maybe about creating those opportunities, not just sitting in the office waiting, but you willing to go out there, knocking on the door. The fact that you're not sending anyone to go and find to buy these chemicals. You go yourself. You do those things yourself. You are. We're recording this episode. It's 1 a.m. for you. Last time we talked, it was 4 a.m. because the time in Europe, the time in US. You said you don't care when we talk. I'm always awake, pretty much. So you are, if I can say, like a workhorse. I think there is a lesson there. So maybe, yeah. Let's first talk a little bit about Moretex. What have you changed, and then maybe the lessons you've got from actually putting together this wild deal and how it actually happened, and how you think you can maybe replicate that in the future.
So this one was case books. I mean, this was a beautiful situation. So when I came into Moretex, the family left. I came in. I have brought in 4 new people, which is very important because we brought in the things they very much needed. But they needed a maintenance guy that was really good. We brought him in. We needed a standard operating procedure guy to come in there to do standard operating procedure. There were no standard operating procedures here. They have not had a salesman here in 31 years. And when most people hear me say they haven't had a salesman in 31 years, oh my God, I actually take that as very positive, because that tells me the product's really, really good, that they're still in business without a salesman for 31 years. So that tell me all I needed to know right there. So I came in. The first thing we normally do when we buy a company like this is we go after the cost structure. Cost structures are very important. There's a lot of waste in those cost structures. So we went through the cost structure line by line. And what we saw was we felt like they were overpaying for supplies. So what we've been able to do is cut cost to our suppliers significantly. So that automatically dropped our prices right there. Then we also went and there was this part of this process here where they would actually bring raw materials in. I'm not going to get into the science with you, but because it's practically don't understand it still. But they bring in these big Gaylord boxes full of polyethylene pellets, and then they would ship it back out and go up to North Carolina. And when it would get to North Carolina, this guy had these huge machines called pulverizers, and they would pulverize these little plastic BBs, you can call them, and it would come out as like almost like sugar. It would break it down significantly, the size of it. And then they would ship it back to the plant. And I walked in here and I said, look, that doesn't sound right to me. We need to be a little bit more efficient about that. I said, why are we doing that? Why are we not doing that in-house? So I got in my car, went up there and met the guy. And you'll like this story. So we went to dinner and we were sitting there and I said, look, we need to make this process between the two of us, it needs to be more efficient. What do we need to do? He said, well, I'm kind of burned out, Reggie, and I've been doing this a long time. Why don't you just buy me out? So that's what we did. We bought him out. So what we did by buying him out is all of a sudden we're now vertically integrated. And we're bringing all the machinery back here. We're putting it in place. We're finding some efficient ways to run it with other machines, where you don't have so many people, taking a bag out of this and moving it over there. It's all going to be automated. We've automated our boiler. We've done a lot of commuter automations. We've done a lot of utility work to try to get our utility bills down. Our packaging costs have come down significantly. We have, there's been so many. Okay, for example, the telephone bill here. I know this is, small or de minimis, but I still think it's worth talking about. Their telephone bill here was $750 a month. Right now it's $15 a month. So there's so many ways you can go through and cut costs. We cut costs on the waste pickup. We cut costs on how they were buying. They were buying 12,000 pounds of raw materials at a time. Well, I came in and said, why don't we buy 40,000? And by the way, if I'm buying that much more, I want a significant discount, and we got it. So, and then with all of our raw materials, this is another good thing we've been doing. And I believe the family started this before we got here, but the family, they started buying all the raw materials that go into our process, all USA made. So now that the Trump tariff situation is going on, believe it or not, it is absolutely helping us like you would not believe. We have got the wind to our back because, matter of fact, a lot of our current customers they're ordering larger because they don't want to order from overseas anymore because of the tariff situation. So that was a very lucky break. Now that was luck. But yes, so we're, redoing the plant, fixing the plant up. The plant, I found out the other day, was the oldest chemical plant in the southeastern United States. And I don't know if this is true or not, so don't quote me on this, but I was also told from another guy that I'm the youngest owner of a chemical plant in the United States. But now I cannot say for sure about that. That's just what somebody told me, but I'm having a blast. We're having fun here. Our margins are getting better here. I'll tell you this, when I came in, we were losing money. We were hemorrhaging money pretty bad. When I got through with our cost cutting measures, we did so much cost cutting. And listen, when you cut costs, normally it affects your quality of your product or your customer service. In these cases, neither one of them was affected because it was things that, like phone bills or packaging nothing had to do with, firing employees or, laying anybody off. We've actually brought more on. So we've done some very strategic, smart cuts, and we have saved this company a lot of money. And now we are actually cash flow positive by just cutting. Well, see, now I brought some new guys in that are very, very good at what they do. And so now we're focusing on the revenue side. Well, the problem here was these guys that ran Moretex were very intelligent, great family. They were focused primarily on textiles. Well, textiles are all going overseas because Jimmy Gibbs is helping them do that, right? So what I said was, let's get in here using different technology, artificial intelligence, whatever. Let's figure out what else our product goes into so that we can branch out, diversify our customer or our customer base, but also diversify our industries we can go to. And we actually hit a huge one the other day. We have found 3 more industries our product will go into beautifully without any alterations or anything to be fixed. And we've already got the setup. So why am I telling you all this? So from a value standpoint, in my mind, when I bought this place, I got it for such a good deal. Let's say I got the real estate for, I don't know, let's just pretend like 20 cents on the dollar, okay? I got the chemical plant for free. Does that make sense? So if the chemical plant survives and we can make it work, and we're going to, and it's going to be great, if we can, that's icing on the cake. If it doesn't do well and we can't fix it, which we're going to fix it, I've got machinery here I can sell. I've got real estate I can sell. I've got a formula I can sell. I got brand recognition. I mean, the brand of this company is unbelievable. I mean, had a meeting with the CEO of a German company last week, and we were talking, and he said, Reggie, it's so easy to buy from you. And I said, well, I appreciate that, but what do you mean by that? He said, y'all make the best polyethylene emulsion I know in the United States, possibly the world. And I thought, wow, that's a strong. So basically I got that business, formula, employee base, customer base, basically for free. If that makes any kind of sense.
It makes and it doesn't. So maybe the question for the owners, like, why didn't they like run an auction or hire the investment banker or to sell the business? Like,
well, I came in and just, I think they were very tired. I don't think they were very interested. They didn't have anybody that could run the business. The people that were running the company, I think they were running, nothing against the family. The family is fantastic. I mean, I absolutely love the family. I mean, I told them I wanted to adopt every one of them, but I feel like they wanted somebody young and smart to come in here to take this business over and to try to make it live. Because remember, this is their family history here. I mean, this is the Irwin family history. I mean, they've been in business 117 years. I think there was several things. I think maybe it had been maybe that. I think I was at the right place at the right time. When you walk into these deals, you're just very friendly to them and you say, look, I'm here to help. I want to turn this company around. And that's the honest to God truth. I bought Moretex to fix Moretex and to own Moretex for the long term. Now, down the road, and I've already had people approach me about selling the real estate since it's so valuable. I mean, my lawyer told me a couple of weeks ago that in the next 7 to 10 years, they're building hotels next door. They're building all kinds of these office buildings, big skyscrapers. They said that in 10 years, the real estate next door will be worth $700 million. So there may come a time where somebody comes up to me and says, Reggie, we want to lease this property from you on a ground lease for 99 years, triple net lease. And I say, okay, we can do that, but you're going to move my chemical plant somewhere else. And then I'll still own the property and I'll lease it to them. Now that may very well happen, very easily happen. And there's actually been some talks about that. But my sole purpose here was to take over Moretex. And Moretex is a big name around here. So that's been my mission the past 6 months.
Yeah, this would have been my next question because the previous owner, the previous family held it for 117 years. So what's your plan? So you can, you just said it out. So that makes total sense. Now that you made this deal of a lifetime so far, if we can say that.
Oh, I would absolutely say that.
You called to Jimmy, your first business mentor, saying your story and saying thank you and appreciating his effort and trust in you when you were younger?
Yes, I spoke to Jimmy. I actually went to his office and spoke with him about it at length, probably about 3 months ago. And he's actually down the street from here. And Jimmy's just a really good guy. He said, good job. You did a good job on that one. I said, I really do appreciate it. But but listen, it's not just Jimmy. I've had a lot of really good people around me, and I think that's the secret. I really do. I mean, I could name off 100 names of guys, older guys that's, been business guys and managers and lawyers. And I've just been very blessed to be around these guys and affiliate with them in a way to where, you can learn so much and it can go so much faster if you get with some of these older guys, because they've lived it all. They've experienced it all. And I've had some really good people around me. I mean, Roger Ezel's been fantastic. You've got Phil Patrick's been fantastic. Walt Hollifield's been fantastic. Joe Elmore was fantastic. George Henderson, Jimmy Gibbs. You have Lynn Spencer in real estate that's helped me out tremendously. I mean, I could go all day long. I mean, it's just, there's so many good people out here. And I think any young entrepreneur or business owner should have a network of people like that. Joe Wilson. I mean, good Lord, when I was buying Moretex, I went to Joe Wilson and sat down with him and said, Joe, what do you think? And Joe helped me go through the process. There's just a lot of really good people out here. And I would advise everyone watching this, make sure you have a team of mentors around you that you can trust. They will help you. And do not be scared to ask them for your help either, because they want to help you.
I've been taking tons of notes here. One thing has been like being at the right place at the right time. But for this to happen for you, I think the 3 things has been so far. Correct me if I'm wrong. Maybe you can add something. These are like the secrets, if we can say so. Number 1 is just go and ask this question. You did with your previous, like a first mentor, Jimmy. You just went and asked, and no one done it before. That's what he said, and that's how you got your opportunity. That opened up like so many doors, I guess. That's number 1. Number 2 is like doing those meetings yourself, like the Moretex one. The fact that you decided to go there yourself. If you would have sent someone, probably, or
never would have happened.
Yeah, never happened. Because of the approach, this conversation wouldn't get there. Okay, number 2. And number 3, getting those smart old people who actually want good for you around you. So the relationship part, and because this has brought you so many opportunities, lessons, and when doing deals, advice as well, when putting it all together. How do you do that? Lots of people know that your network is your net worth. It really is in your case. So how have you done it?
This is gonna sound like a cop out, and I don't mean for it to, because I really believe everybody on this planet has a special gift, and everybody's good at certain things that it's just natural. And from a very, very young age, for example, I grew up in a community of, higher, I would say, upper middle class to, the wealthy. I lived in a neighborhood with my parents in Lake Bowen, which is in Spartanburg County as well. And all of our neighbors were all business owners and had big companies. And I was exposed to this at a very young age. So I grew up with a lot of these guys, and I knew their kids, and we played together. And then they introduced you to their friends. Then they introduced you to their friends. And then those friends introduced you to some more friends. And then next thing you know, you have this army of contacts. So, I hope that answers your question. I mean, I've just always been one. Okay, I'll give you an example. Today I was in my office talking to a friend, actually before I came on this interview with you, this podcast. And I'll tell you, I was talking to Roger Ezel. And, I told Roger, I said, we were talking about, like talking to people. And I told him I was actually telling this podcast how people, your listeners, if they take nothing else from me, take this. Do not be scared to talk to people or to go ask questions or to go ask for deals. Because I'm going to tell you, it would scare you how many times I've made deals or had good luck because of doing that. like you just mentioned a while ago. And Roger told me, he said, I got another one for you. I want you to meet next week. And he told me the guy's name and wrote it down. And I'm going to go meet him next week. And he's, another old man. I mean, that's how it works. It's just, that's the way it works.
And you probably have said that you have some magic for this as well, because if you look at yourself as well, if the person is not a good person, you don't introduce them to other people. It must be a good person.
Correct. I only want people around me that have high standards. I want people that are, I will not tolerate complacency. I want people that work hard, honest, and I want quality to be associated with everything I do. I want to be proud of every project, every company, every real estate deal, any deal I do in my life. I want to be proud of it. And I want it to know at the end of the day when it's done, and I want somebody, my goal in life is when I do a project, somebody to say, oh, Reggie Pryor did that. It's been done right, then. That's done right. That's what I want. That's my biggest goal.
What comes to your mind when I say work ethic?
You definitely need to have one for sure. And I'm afraid our generation lacks that a little bit, so I'll tell you my work ethic, if you don't mind. So I work, and I'm not kidding, I work 7 days a week. I work 365 days a year. I do not take Christmas Eve off, 4th of July off. I work every day. I've done that for years. And my girlfriend got me to go on my first vacation last year to the beach for a week. And that's the first time I've been to the beach in 7 or 8 years. So I put a huge, if you want to, it's like, what is the golfer Payne Stewart, he once said, and I think Donald Trump's even said this, if you want to, the harder I work, the luckier I get, it seems like. And it's just, there's just something to that. And I can't explain that, but it's like, but at the same time, I do enjoy working and I enjoy what I do. I mean, to me, I'm not working a day in my life. If I made 5 cents a day, I would still do what I'm doing. I mean, I absolutely love it.
It's not a wellness or this good mood podcast or something like this. So maybe one question to you. Are you happy? Like deep down, like sometimes it gets hard. You're working super long hours all the time, every day. On the deep core level, are you happy? Or sometimes you're like, it's maybe a bit too overwhelming or something. Do you understand what I mean?
Yeah, it's definitely overwhelming. I find myself, daily, you try to grind, you try to make things happen, and you're just, so yes, I'm happy. I'm happy. I get discouraged a lot. I get down in the dumps sometimes, but I love what I'm doing. I mean, it's just, when you do stuff like this or any other thing I'm doing, it's just, there's so much detail to it, and there's so much going on at one time, and environmental concerns, there's just so much, and it's all at one time. So it can make your life outside of work. When I was younger, I used to think, a lot of these big business guys, all of them are divorced. I wonder why that is. I know exactly why it is now, because when you do things like this, you're so into them, and you're here so much that's the way of life is. And I'm just sure a lot of women's not going to put up with that, and I don't blame them. Like you said a while ago to your viewers, it's 2:00 in the morning. I'm down here at a chemical plant, so, and happy to do so, by the way. I appreciate the invite, but yes, I am. To answer your question, I'm happy. I get disgruntled a little bit, but I'm fairly a pretty happy guy.
No, this is awesome, and thanks a lot for sharing this. That's why I sometimes like to ask those questions. It's the reality of putting it all together, like running a large portfolio of different companies, new deals. The current ones are struggling. You have things going on. There's a guy in Europe reaching out, wanting to do a podcast during the night. You say yes.
So it's funny. So when you sent me a message to do your podcast, and please don't take this the wrong way, because I don't watch stuff like that. I don't do interviews. I don't do podcasts. Never. I don't do them. And it was something about you when you sent me a message. I said, I kind of like this guy. So I had a lady in my office basically pull like a CIA on you and figure out who all you were and what you did. And she sent me some papers in my office one day, and I read them, and I told her, I said, I want to do this guy's show. I said, because I think it's very important, and I like what the guy's doing. And how old are you? I mean, you're very sophisticated. I mean, yeah, you asked some really good questions.
Trying to. Thanks a lot. This is fascinating, and again, I really appreciate this location. I've never had anyone doing, always in the office. It's never in a place like this, because no one owns places like this.
Well, I figured you'd like to see it. I wanted you to see. This right here behind me, this is what gets me excited, because this is American manufacturing. And there's a good chance, if I have not come in here and bought this business with a 117-year-old history would be gone. And there's employees here that have been here for 45 years. So what makes me feel good and what I really enjoy is the ability to get this thing back on the track, make it work, make it happen. And everybody keeps their jobs. We fix the place up, and life is great. That's really what it's all about. I mean, sure, it's about money. It's about making good money and stuff, but there's more to it than that, I think. I really believe that.
If I may ask, okay, money, but you're working all the time. What's the thing for you which gives you this joy of doing another deal, like a larger one, having enough liquidity to doing another one when this comes to you? Or because if you look at current society, people, I think, want to build those businesses and companies for different reasons, and that's why so few succeed, because it's so hard, and in reality you're just working all the time because it's so competitive. So what's the thing for you if you think about this? What's the joy part of? Obviously it's a capitalistic world, you do it because of money as well, but if the money comes, what do you do next?
With this particular investment or anything?
Anything. You're a young guy, lots of years ahead of you to build this even larger, doing more deals like this. You just shared the numbers of the real estate valuation, which they're going to be in 10 years. You could possibly sell it then, and then what? Just keep doing what you're doing?
Probably. I mean, I enjoy it. I mean, to me, it's never about money. It's about the game. And to me, I play it like a game. And, and if I wasn't doing this, if I retired today and went away and just didn't work again, I'd go crazy, I mean, I would lose my mind. And, I like doing it. I'm halfway decent good at it. And, it's helping other people. So, I would like to keep doing it as long as I can. But yeah, I enjoy it.
Be one more boring question when it comes to deal making and deal flow coming to you. How picky you are with the deals? Because I'm sure you get brokers reaching out to you all the time because you're this deal guy, you're buying different businesses, you value investing, they can send you those distressed assets, things like this. How picky you are actually when it comes to making those investments, acquiring companies, real estate, doing these public market deals, how much you have going on?
As far as monetarily speaking, or just deal sizes, or
it's the action part, not even the sizes. Just something good comes to you, how picky you are, by actually putting your time and effort into this.
I think I understand the question. So I'm that guy that if you call me or send me something, you're going to get me and I'm going to look at it. And because a lot of times you'll send somebody, a letter of something you want to do or something you want to. I've had so many guys that's been so good to me as far as when I was younger, giving me a time of day, and I kind of want to repay that. So when somebody sends me something, whatever the deal is, I mean, I had a guy come to me last month, came to my office. He used to be a professional football player. He played for the Carolina Panthers, and he's starting up a company. And me and him's looking at it right now. I mean, I might fund his project, but if somebody calls me or sends me a letter or whatever, I'm gonna get in touch with them and I'm gonna talk to them about it. I mean, I would look at an array of different things. Now some of them are in my wheelhouse and some of them probably aren't. But yeah, I hope I answered your question.
No, you did. That's awesome. Because I'm asking also because many people will reach out to you because you said yes coming to the podcast. So you might get tons of opportunity as well. So it's an hour well spent. It was for me. Like it's fascinating stuff. I was doing the research. You sent me the materials. Considering how busy you are, you sent like so much stuff, which made I knew so much about you, even though you haven't participated in interviews before. I couldn't find any.
I've never done one before. You're my first. And that's because, like I said, I've had several people reach out to me, want me to do them, and I just never would do them. But I don't know, something about you, buddy. You were pretty. Seemed like you had your stuff together. You had it going on, and I said, I'm gonna help this guy out.
A lot, honestly. I will fly to you. By the time I think I'm posting this, I'm in US probably. I'm gonna be in Miami and New York. It's a very short trip just to meet one special person there who probably something similar which happened to you in the early stages of your career. You never know where it takes you, but you want to make sure you meet this person in person. So that being said, I'm sure I'll keep coming back to US. So I'll also make sure that I'm gonna meet you in person one day.
That sounds wonderful. I'd come here anytime. Love to meet you.
Okay, Reggie, this is an hour well spent. Tons of notes, tons of lessons. Thanks a lot for sharing all the details, how you think about investing, value investing, and especially the Moretex deal as well. I think this is the special one because it still shows that deals like this happen if you're a good person, if you know what you're doing, and if you're willing to ask those what is the right way to say, bold questions, if we can say so.
And let me tell you that I'll finish it on this because this is very important. Our generation, mine and your generation, I'm 38, you're 31. Our group of guys, there's more opportunity for us than any time in the history of the United States. Because what I'm seeing out here is, and I've got them calling me every day, a lot like Moretex here, like there are so many Morexes out there because a lot of these older people in the baby boomer generation are retiring. They're quitting and they're wanting to sell their businesses and there's just not any buyers for them. And their kids don't want to take the businesses over. That's like I was telling somebody yesterday, if you had a little bit of energy and an ambition, there would be so many opportunities out there. You could just go around and just scoop them up. And that's actually what we're starting to study right now. So,
okay, I hope people listening, someone will take action because I think it's hard, but it's awesome life chasing those cash flow businesses. Not all of them are cash flow positive right away, but hopefully you can make them. Okay, Reggie, thanks a lot for doing this. I really appreciate that again, and talk to you soon.
Thank you, buddy.